The point here is that what we will also look at is the history of this petrodollar recycling scheme, because there was once a good, decent, at least, king of Saudi Arabia by the name of King Faisal. King Faisal was responsible for implementing a boycott on the United States. No oil went to the United States in the 1967 and the 1973 wars between Israel and the Arab nations. And he also was responsible for a little-known fact of history that we will discuss, that states that he had actually called for what was called Operation Breadbasket, which was to take the money from the oil that was barrel of oil rapidly doubled because of the 1967 endeavor, and within a year it was quadrupled. So that was when the beginning of the oil outflow started going from Saudi Arabia, because America ran out of oil at roughly the same time and started to become a net importer, and that's what created this system and mechanism. And what King Faisal wanted to do was, instead of float those dollars back into New York or back into treasury bills or back into the petrodollar system, Faisal wanted to develop Africa. And in fact, we'll see that in 1975 he was assassinated shortly after meeting with Henry Kissinger and talking directly about Zionist conspiracies. And it's a little-known piece of history, because when you look at the numbers, one could say that he was assassinated by his brother, and that's the very common argument that's made. But the simple fact of the matter is, when we look at the relationship between the aid that was given by Saudi Arabia to African nations like Sudan during the time of King Faisal was building educational institutions. He actually created the Kibar al-Ulama during this era. We don't want to talk about the specifics here because it will be part of our discussion. But what we have, the name was called Operation Breadbasket. You can't Google it. I'm sorry. It's policy documents. But we'll talk about it during week 7. Again, this is an introduction to the course to try to get you guys intrigued a little bit about what we'll be revealing. So we will discuss that, and we're going to identify the many moving pieces of the chessboard as they relate to developing Islamic economics as a paradigmatic shift rather than an accomplice to the contemporary system of destruction and control, if you will. Today, nearly all Gulf assets are held in treasury bills, and the dollars just magically make their way around the pictures you see there, the starving, malnourished African, while also ignoring the sweatshops that exist over toward the east, and the underdevelopment of Asia generally, and the enormous discrepancy of wealth in the Arab world as well. So as Sharia-compliant finance contributes and fails to respond effectively to these situations, it is definitely worthy of our critique. And whether changing the petrodollar system or altering Sharia-compliant finance leads first to influence the other, we should recognize the relationship between this real wealth, potential for development, and the means of attaining alternatives using Islamic financial means. Next slide will show interacting influence, and we're getting close to the end of our discussion, I assure you. We've been going for about an hour, probably a half an hour again. So the industry itself is a product of its environment, and this shows that. We posted an article on Islam policy that I thought was particularly interesting. It was an analysis a couple months ago by a man by the name of Toby Birch, who was the managing director of Oppenheim & Co. Limited, which is a international firm. And he says, quote unquote, "Given the history of Islam, one would expect its financial system to be a, quote, grassroots phenomenon. After all, the religion was propagated by word of mouth, assisted by the example set by Muslim traders, known for their honesty and fair dealing. However, the modern industry has a hard institutional feel to it. Western investment banks are drawn by the hefty corporate finance fees on big sukuk bond issues. There is minimal appetite for offering retail financial services. Small but sincere fund providers struggle to afford the extra costs of Islamic compliance. Large institutions argue that if one cannot afford a single scholar for your fund's fatwa, let alone an entire Sharia board, then hard luck, that's the market rate. Their wealth management arms have also attempted to milk money from the wealthy in the Middle East, offering Islamic-looking funds catering for exotic and esoteric themes. The average fund size is apparently around $30 million, so it would appear their uptake has been unspectacular. The open qualities that spurred the spread of Islam, he says, appear to be lacking in its implementation." That would be a fairly good summary for the state of affairs within Sharia-compliant finance field. And it's a particularly important tragedy because as we look at this chart that you have in front of you, slide 7, dynamic influences on the Sharia-compliant industry, you'll see that in the middle I have stationed, and I guess the arrows got a little bit messed up. I must have, I don't know. But the Sharia-compliant finance industry is in the middle, and then you have Ummah in general, rising middle class in the Muslim world, foreign banks, international finance, global macroeconomic paradigm or neoliberalism, rulers of Muslim countries, geopolitics, transnational institutions. What this chart is trying to show is that you cannot study Sharia-compliant finance industry in and of itself by itself. That it is as much a product of its environment as its environment could be, perhaps, more of a product of it, right? So, interestingly, let's just take each of these briefly and talk about, I'll just ramble on for a little bit about each one for 2 minutes each about how we're going to connect, for example, global macroeconomic paradigm. Right now, an institute of government officials, or maybe they were partially private, probably academic, private, and government, issued a report in the United States. It's about 600 pages long. I haven't read the whole thing. I just read the summary because I don't have time for this. But it was called the Financial Crisis Inquiry Commission. And it just released this report that shows very clearly, I have one quote from it here, from 1978 to 2007, the amount of debt held by the financial sector, they're talking about America, soared from $3 trillion to $36 trillion, more than doubling as a share of gross domestic product. The very nature of many Wall Street firms changed, from relatively staid private partnerships to publicly traded corporations taking greater and more diverse kinds of risks. By 2005, the 10 largest U.S. commercial banks held 55% of the industry's assets, more than double the level it held in 1990. On the eve of the crisis in 2006, financial sector profits constituted 27% of all corporate profits in the United States, up from 15% in 1980. Understanding this transformation has been critical to the Commission's analysis. And they go on and say that we conclude that the financial crisis was avoidable. The crisis was the result, they say, of human action and inaction, not of Mother Nature or computer models gone haywire. It's amazing that the American people are not up in arms over this reality, being that this is a report commenting on the cause of the catastrophe, blaming it on the banks. But the reaction in 2008 was to bail out the banks. And now the banks are even more powerful, even more greater in size, and even more destructive in their nature as they invest not domestically but internationally. And what we have to realize is that this is the global macroeconomic paradigm in which Sharia-compliant finance must function. And it would be very easy for it to pose a realistic alternative. Yes, exactly. They blamed the homeowners. That's the typical claim. People took out loans they couldn't afford. But to say that is to say that that's a piece of the global macroeconomic paradigm in which Sharia-compliant finance industry functions. And without understanding that reality, then you will not be able to prevent the Sharia-compliant finance industry from functioning in similar ways and from creating similar crises, I can assure you. As long as it plays by the same rules, then it will achieve the same results. So where you see similarities, there's warning signs. But where you could pose a completely paradigmatic change, right, an alternative to the FCIC report that nobody's talking about, by the way, then you would be able to pose a paradigmatic threat. And that means there's contrary potential. So let's take next the rising middle class in the Muslim world. We're going to be listening to an audiobook because I couldn't get it on PDF form. FCIC. So we're going to be listening to some statistics about the rise of the middle class in the Muslim world. And within one of the readings that we have this week, called The Demand for Islamic Banking, Piety, Class, and Global Identity, I think it's a very good report, short, 10 pages, I think. Everybody should read it. I think it's very valuable. We have a quote that I'd like to read to you. Two transformations have occurred in the Muslim world in the past decade, each occurring alongside the rise of Islamic orthopraxy. that suggests different perspectives on consumers' use of Islamic banks than does the literature on bank marketing. The first transformation is the rise of a Muslim middle class. The literature on class transformations in the Muslim world repeatedly finds that these groups face distinct challenges of identity maintenance. On one hand, Muslim middle and upper classes have resources for consumption that set them apart from the poor and working classes. At the same time, these same individuals face problems of social dislocation that are a product of the very processes of modernization that transform their class status. A common finding is that such feelings of social dislocation increase individuals' propensity to identify with Islam in their behavior, lifestyle, consumption choices, and political attitudes, many of which are more salient issue areas for members of the middle and upper classes than they are for the poor and working classes. For Corey, 1983, Islamic revivalism, quote-unquote, in politics and social life is a central response to modernization by classes that in recent years have been drawn into the modernization process but have not been assimilated by it. So that's very fancy academic speech to say that there's two dynamic forces pulling on Muslim middle classes that are developing. One would be what's this notification do? I request controls. Okay. I don't know what to do about that. Sorry, I'm not a whiz. I don't understand whiz IQ yet. Can you hear me? Can everybody hear me? Sure. Alhamdulillah. So the point is that there is two primary pulls on the Muslim middle class. One is this process of globalization, this modernization, and what they're trying to say is that there's also this traditional referral to Islam. So with these two pulling poles, you're having the majority of people that are of affluent or of a representation of a Muslim middle class entering into the majority of the Islamic banking, mostly as a conscious choice to not to give up or to not give up traditional values or traditional religion. And you'll see this made in academic literature oftentimes. But the point primarily with regard to the effect of the rising middle class in the Muslim world is that as we see these alterations in political makeup transform, we also realize that there is indeed this pull between globalized Western secular norm and traditional Islamic norms. People tend to be Islamic to a degree, but only to the degree that it is convenient. Certainly not the type of Islamic mentality that would want to advocate for a paradigmatic threat posed by Sharia-compliant finance industry. But we also have the rising Islamic revival and the opportunity, it looks like, especially now, we'll have an enhanced opportunity to speak and to discuss. So what we have to do is we also, rather than just blaming the despots and the dictators, we have to understand that the consumers of the products within the Sharia-compliant finance industry actually affect the industry as well. And that is something that we have the ability to shape then. That is something that means that we can, in and of ourselves, also take into consideration this rising Muslim middle class. And we're actually going to, in fact, discuss that when we look at networks of privilege and power. I think it's week 4, when we analyze the Arab world and the Muslim world generally and the makeups within those societies. A very interesting discussion will be when we take these readings and the statistics and we look at that influence on what it means and what we classify as a rising Muslim middle class. That is to say that it's important as a component of shaping Sharia-compliant finance industry. You know, the wealthy Gulf citizen is as much responsible for the way the Sharia-compliant finance industry looks as the Sharia-compliant finance industry and those that work within it are for shaping the products and for the systems that exist too. And we have to understand that dynamic interplay if we're going to understand the direction that we're going.